Good morning, everyone. I am still getting set up, so if you will give me just a moment. We are going to be looking at the currencies this morning. We may go over and look at the indices as well. It just depends on what's going on this morning. I hope everyone had a wonderful weekend and holiday. Now, right now, you can see that the British pound dollar has came back and it's trying to test this blue dot here, testing the ATR up on the 30-minute, waiting to see what happens over here on the 60-minute. You can also see that we're overextended on both of these. So this is one I'm going to wait and see what happens. We can go and look at other ones to see what's going on them. And we'll do that in just a moment. And I do have the Nadex open on another screen. And on the trading view, if I show you how to enter order, please be aware that it would be in demo. On the Nadex, I'll just tell you what's available. I'm not going to show my live Nadex account in the room. So in this case, this is saying it's potentially going to go up. This one is saying it will potentially go up. It does have 8 minutes remaining, and I do want to see that bullish bar up here on the 30-minute. It does seem like it will potentially go up today. Over here, let's change this over to, let's say, the USDJPY. And we'll change each of these. So we're watching one on the European currencies and then the USDJPY. Now here you can see that it's come back and it's tested this fast moving average, testing the medium moving average over here, and testing the ATR over here. This is extremely what I would consider oversold. I do think that the USDJPY is going to go down. I would like to see a bearish bar develop over here on the 15-minute. Now, using the touch brackets in Nadex, price is currently trading at 109.45. The closest one you have is a touch bracket at 107.64, and the ceiling is at 110.14. To enter that, the premium currently is 109.42. So you're risking $72 to make $178. Okay. Now, it's not that you'll make the full $178 unless we have a really big move this morning. I think on the British pound dollar, you see that you have that bullish bar developing. Now on that one, and let's see what they have for that one. Price is currently at 28.98. So you have one on the British pound. The floor is at 28.48. You're going to have about $55 of risk on that one. With a potential to make 195. That's actually not bad. And I'm going to put this one over here. We still got about 4 minutes. So while we're waiting on that one, I'm going to go grab a cup of coffee and I'll be back. Okay, I'm back. And as you can see, we are developing that bullish bar with about 23 seconds left. So if you wanted to trade that using like a mini Forex account, then you could actually buy this at the market and it would be $28.93. Now you can see it's still developing. Good thing I waited, huh? Because as you can see in the last 23 seconds, this was not a bullish bar. The bullish bar is very important for it to develop. Here you have a doji. So potentially this could go down, but it's going to be dependent on this next bar. With this being overextended and this being overextended, I would say that more likely than not it will go down. And let me set that one up so you can use either the Forex, the binaries, or the touch brackets. Now, in the case of the USDJPY, you would be going short. Now, there is a potential for this to come back and touch 109.50 as well. Over here, it would be 109.56. And if you wanted to enter this early, the way that you would do that is to, if you're using the actual Forex symbol, you would need to set your stop really above this red dot here, which would be about 60, maybe 65, which would be about a 20 pip stop. And I don't know why that has a 9 there. And this would be the equivalent of a mini Forex account. And again, using the touch brackets, you would be entering at about 109.42 with the touch bracket 107.64 to 110.14. You're basically risking $72 to make 178 if it was to move through that touch bracket, okay? In this case, I'm going to go ahead and do this. Now, this is in a demo Forex. You can see right here it says paper trading, okay? I would actually trade the floor bracket on this. And it was executed. So we go down to settings. Now on this, I would be setting a stop about 65, like I said. So that gives you your buy stop, and this way you can drag it down. Now I'm going to put the lines over on the 60-minute so that if you were using a touch bracket, this is where your touch bracket would be, and it's 109.42, which is just about here, and this one would be actually your entry point. And we're just going to set this in a off color. And the top of that bracket is at 110.14. So if you're using a red line to mark that, this would be your stop if touched using the brackets in Nadex. And then I'll also show you, okay, what if you were doing a binary option, what would it be? And we'll do that in just a moment. The bottom of this is 107.64. So I'm just going to set it here and then set the value of it. In that one, I'm going to set to green because this would be your achievable profit. And this would be 107.64. Now, as you see, I'm going to have to shrink this up for you to see the actual touch brackets. Okay. Now, if I was doing the touch brackets, if it came back and it closed above this high at 109.88, I would close that position. And that would be on the touch brackets. Okay. Now, let's go and see what kind of binaries you would have available on this. Right now it's 7:35, so you'd have to use a 9 a.m. or in an 11 a.m. Price is currently trading at 44. So they have one at 46, one at 42, and then one at 109.38. The one at 109.42 has $38 of risk. The one at 109.38 has about $25 of risk. So it would be, you know, which risk are you more comfortable using? And that's a personal choice that you have to make. Now, the other one that you could do if you were using the Nadex would be the call spreads. Sometimes you can get a bargain in the call spreads, sometimes not. In this case, you could do the 109.40. It has $3 of risk on it right now. And you have the potential of making 97. To me, that wouldn't be a bad price that you have an hour and a half for this to move. I think the only issue is you're not moving very fast. If I put the volatility indicator on here, you're moving about 6 pips in a 1 hour period. Now that may increase because we have the market opening in about 30 minutes, but today is almost like a Monday, so we may be slow. But again, if you wanted to do that one, you could, and I'll put that one in solid lines. Your entry price on this one would actually be $109.37. So I'm just going to put a line here, and then I'll make it different. I'll do these, and we'll do that in a deeper color. And your floor on that one is 108.40. And I'll do this one in green as well. And it is 108.40. Now, I don't think there's a big chance of this moving down here within an hour and a half. I mean, price is moving too slow. Okay. If there's a sudden movement in the market, it could. I just don't foresee that happening. And I'll stretch this out a little bit so you can see where these are. No. This is not at the right area. This was at 37. Because that's your entry price. Now on this one also, I think the 109.40 is behind this red line. But that would be your ceiling price on that one. Any questions on these? I mean, you've got call spreads, touch brackets, spot Forex, and then a binary. And the binary, I think, is the one I didn't put on here. But the binary, you're going to have to make a choice as to which one you would want. Again, you could get 38. And I just don't think I have enough room for 38. We can try though. Well, this line here would be your binary if you chose the one that was out of the money with about, actually it's $22 of risk, but you also have 42, which is really this line right here. And that one would have $38 of risk on it. And you have to choose what risk level you're comfortable with. Now, the beauty is if you wanted to, you could trade all of these methods. The spot Forex, the touch bracket, the call spread, the binary. I mean, it's 4 different ways to trade the same setup. Now, what is the difference? Okay, all right. The call spread, which is the small dotted line, this one is not if touched. It's on expiration unless you exit early. Okay, so this one, let's say that it expires at 109.32. Okay, you would make the difference between 109.32 and your entry price, which is 109.37. If it expires above the ceiling price, then you lost $3. Okay. On the binary, you have to be below the 42 or I believe it was 36. Okay. As long as it expires under that, you would make the full payout, which is 100 minus the risk that you paid on entry. Now, the touch bracket is different. Okay. And this is one thing you have to realize. The touch bracket is if touched. Okay. So if this was suddenly to go up and touch the ceiling of the touch bracket, then you would be out of that trade. And remember, the ceiling on that one was 110.14. But if we suddenly got a spike up and it touched that, you would be out. And of course, then on the spot Forex, you can see the stop is up here at 65. And your entry price is down here. So you're running about a 20 pip stop. Any questions on it? It's just several different ways to trade exactly the same setup. It's just dependent on, what you want to use. You could use one of these techniques or all of these techniques. Okay. Now, on the binary, the call spread, and the touch bracket, you're not paying that pip spread as your cost of trade. They have an exchange fee. It's $1 per contract. To go into the market, it's $1 per contract to come out of the market. Whereas on Forex, this pip spread is ever changing. Okay. The more volatile the market, the more volatile this pip spread is. I want to go over and look at the indices. You can see the NASDAQ very close to forming a candlestick reversal pattern, which may indicate today is going to be a down day. That's going to be an interesting one to watch today. And remember, really, the binary options on these would be these lines here. I think this one was actually 36 and this one was 42. It just so happened that that was where the call spreads in the touch bracket entry was. So. And remember, if you have a question, just type it up in the chat box, and I'll be more than happy to answer them for you. I do think we're going to have an exciting month of trading, but who knows? And remember, this is a mini Forex simulation, okay? If you were doing a major, it would be a quantity size of 100,000. This is where you're getting that bullish bar. I would probably still wait on this 15-minute because it should go through here and test again. I don't like the way it looks right now. So we'll just keep the one on the USDJPY. And I'll stretch that out a little bit. Now, for those of you, one that I don't like to trade a lot is the USDJPY. I mean, USD Swiss franc, just because it's a really slow market. But I'm going to set one up for that. We'll use this one. I'm just going to change this over to a USD. And change this one. And then we'll change this one. And on this one, I want it to be a 60-minute. And this I want to be a 30-minute. And then a 15-minute. And I really don't want Awana down there. I want to use the same exchange. In this case, I'm doing FXM. Even though the charts look the same, I prefer it that way. You see, this is overextended. This is overextended. Let's see here. I do think this is going to go down. Oh, that's the wrong one. And support and resistance. And I can take one of these off. Now, what would make it better for me would be if this one was overextended. But really what caught my eyes when I looked over to my multi-charts, I could see, do you see how this is retracing up? I'm waiting on a bearish bar to form, because right now it's making lower highs with higher highs in the stochastics. And of course, I like my stochastics better. But if that comes in as hidden divergence, we could see another push down on the USD Swiss franc, which is why it caught my attention. I like trading hidden divergence. So. Now, here's the interesting thing that most traders probably don't realize. Here you have made, it's gone from 109.44 down to 109.42. You made just about $1.50, but you've made the same thing on the touch brackets as well, because it moves just like the mini Forex account. In other words, for each pip that it moves, you make $1. The only difference is if this was to suddenly spike up, they could actually jump over your stop. Does everybody know what that means? If they were to jump over your stop, it means they never actually hit the price, okay? And in that case, you're responsible. That's what caused a lot of traders to actually get margin calls during the Brie exit, during the Swiss bank fiasco. They even had Forex brokers that went bankrupt. So if you look over here and you say, okay, I've made $2 over here. If you had the same entry price, you would have made the same amount on the touch brackets. In this case, you're at, pretty much break even on the touch bracket. When it goes down to 41, okay, well, now you're in the positive on the touch brackets. And I still think the British pound dollar is going to go up. I just didn't like the setup here. So now on the Forex side, you can see that your quantity is 10,000, which is the equivalent of a mini. On the touch brackets, you're just trading, one contract for that. My dog is snoring really good this morning. I have a boxer and she just loves to snore. If you're looking at the USDJPY, where would you expect this to go? I would expect it to exceed this low at 32. That would be my expectation. Now, this is the really cool thing about the touch brackets. They expire Friday, okay? So as long as this is moving down, you could potentially make money. Whereas on the call spreads, you have until 9 o'clock, which is about an hour and 4 minutes away. That's your, one of your differences between trading the call spread and trading the touch bracket, okay? The touch bracket is going to last for the duration of the week, and the call spread is according to what kind of time frame that you purchased. Did you buy a 2-hour call spread? Did you buy a daily? Did you buy a weekly? And of course, each one of those levels vary. In the touch brackets, if it goes down and touches the bottom of the touch bracket, well, that's okay because they open up a new one, which is cool. And again, watching this, if it came back and it closed, let's say at 109.70, then I would exit the touch bracket as well. Remember, the top of the touch bracket is up here at 110.14. Just because you entered a touch bracket doesn't mean you have to wait and let it touch it. You can also exit at any point. Over here on the spot Forex, you already have a stop in there, so if it suddenly went up 20 pips, you would be out. And remember, the call spread only had $3 of risk on it. The touch bracket had 78. And as I said earlier, today is like our Monday, so we may be a little bit slower than normal. Doesn't make it a bad day. It just means I pay attention to the binaries because you do need movement if you're using an out of the money binary, which has the lower risk binary option. The USD Swiss franc just took out that high, so there's no potential now for divergence. Now, I do use a combination of multi-charts and TradingView when I'm looking at the markets. I like TradingView because I can open it on my iPad when I'm sitting in the living room and look at the markets. And I'm developing the tools now for TradingView. Hopefully they'll be ready sometime in January or February. Might be March, depending on how much time I have to work on it. They will be available through TradingView as a subscription. You can actually purchase the indicators outright in multi-charts, TradeStation, and NinjaTrader. The difference between the two, NinjaTrader is free and it's fine as long as you're not trading a large number of currencies. I don't like it for trading a large number of currencies, simply because I can't have that radar screen effect or scanner effect. They do have a market analyzer, and I have the tools for market analyzer, but it does slow down your computer. Whereas with multi-charts it doesn't, and TradeStation doesn't. TradingView also has a scanner. You can see it down at the bottom of the screen. It says Forex Scanner. But I'm not sure if I can add the indicators in there. And the difference is all of my entries actually come when price is at an ATR or at a level of support and resistance. And this is where the scanners can actually come in and say, hey, you are at an ATR or you are at, a level of support or resistance. And that way, I kind of stay on top of it because I monitor multiple time frames and multiple indicators within one scanner window. You can do some of that in NinjaTrader as long as you don't overwhelm it. 2, 4, 6, 8. I'm usually looking at all of the currencies that are in Nadex, which is about 10 currencies. And I'm doing it on at least 3 different time frames. So that tends to overwhelm NinjaTrader a little bit, whereas it won't with multi-charts. And this stochastics does not have the smoothing algorithm, so it portrays a much different picture. Let me see if I can move that over here if it shows up. Okay, you can't see the window in multi-charts, but my stochastics in multi-charts is just now starting to turn. So, and that's probably the way I did the streaming software. So maybe tomorrow or when I do it again, I'll remember to set it up differently. Now, the other thing is I don't think we have any market reports that's going to affect the market this morning. Let me go and check. I checked it about 3 o'clock this morning. I usually trade the European session up until about noon, depending on how many trades I've had. And this morning, don't really have very much. We have the existing home sales. On the Canadian side, we have the manufacturing sales month over month and wholesale sales month over month. But no really high volatile reports this morning. In fact, for the week, we really don't have a lot of market reports in general. We have the Bank of Japan Outlook report and policy statement tonight. They never give a time for that, so normally it's between 10 and midnight, normally. They also have a press conference Wednesday morning, probably be about 1 or 2 o'clock. Tomorrow morning we have the core retail sales month over month for the Canadian. And tomorrow night we have the Aussie employment change and unemployment rate at 7:30. Now that one I usually trade with binaries, or I could even add touch brackets or call spreads to that one. Then on Thursday we do have the Euro main refinancing rate, as well as the ECB press conference at 8:30. Now most of the time it's the press conference that moves that one. And typically it's between 60 and 80 pip move on that one. So, but overall, it's not a lot of movement. Now, remember, if you're trading the binaries, okay, if price does not expire in your favor, then you lose whatever you paid in risk. But if you're trading the call spreads, it uses the expiration value. So in this case, the entry was at 42, and let's say that, it expires at 42. Well, then you didn't lose anything, okay? Well, yeah, you did. You lost the $3 because you paid $3 on entry. But let's say that it expires. No, wait a minute. I'm wrong. No, I'm right. It's the entry price. Let's say that it expired at 44, okay? Well, then you actually, only lost the difference between the expiration and your entry price. In that case, it would be $2 instead of the full $3. Let's say that it went down to 40. Well, then you covered the cost of your trade. The touch brackets, literally you have until if touched or the expiration value. And it is moving quite slow this morning. And again, for those just joining us, you basically have 4 different ways to trade this. You have the binaries, the call spreads, the touch brackets, or the spot Forex market. And I've showed you all 3 ways to trade it. You could have used one way to trade it or all 4, or any combination thereof, just depending on how much you're willing to risk on a particular trade. By far the cheapest one has been the call spread this morning. It had $3 of risk on it. But again, you're not moving this morning. So we are short on touch bracket call spread binaries, and on the Forex mini contract. Again, this is in the demo mode on the FX side. Now you could do, what's called a micro account on the spot side. That would be 1,000 instead of 10,000. Full contract being 100,000. The other thing is, even though this has 3 pips, for those of you that are new to trading Forex, it's not the third digit that determines the pip. It's just 2 digits. So if this goes from 65 to 64, that's a 1 pip move. That last digit, which is the third decimal point, is considered the half pip. And the touch brackets have the same pip value as what the mini has. The biggest difference is on the spot side, you can put in a stop, but if it's a very volatile market, they can jump over it. Other than that, I think they're pretty much the same. Because this stop is if touched. If I put a profit target down here at, let's say I put a target here at 120. If they touch that, they actually have to exceed it by 1 pip. But if they did, then it would be filled. So the touch brackets, to me, bring back live trading of the Forex market, which I enjoy without that volatile pip spread. Because, for example, if you're trading in the afternoon and you want to hold your position overnight, a lot of these Forex brokers increase this pip spread to about 20 pips. So let's say this was 4:30 in the afternoon. This would automatically get stopped out because of the pip spread. And that's not something you worry about if you're trading the touch brackets. You just have to worry about if price comes up here and touches it. I think other than that, it's pretty similar to trading the actual FX market. Of course, if you have any questions, by all means, ask them. Because otherwise, I don't know what you don't know. I don't know your experience level or whether you're understanding or not. Now, you do need to subscribe to the channel to see when I go live. I don't do it on any particular schedule. Just if I get up and feel like going live, I go live. So if you subscribe to the channel, then you'll get notified. If you allow notifications from YouTube anyway. Now on the binary in the call spread, you have about 45 minutes for that one to expire. And that will expire in 45 minutes. And it will use the expiration value to determine whether you made a profit or not. I generally will set a profit target on my binaries. Let's say that I was risking, I entered this as a short position, so let's say I entered at 75, then typically um, I'm sorry, something ugly was posted, so let's say that I paid 75, then I'm going to set generally my target between 15 and 25. Now remember, on the call spreads, you don't have to worry about setting a target as much. Simply because it's going to use the expiration value. But on the binaries, I do generally use a target only because you can see price pop down and hit a certain value, and then it will go back up against you. So if you can average a 1 to 2 risk to reward ratio, normally you're doing pretty good. 1 to 4, 1 to 5, up to 2. Sometimes I have been able to get as high as 1 to 4, especially on the touch brackets. And today we're probably not going to hit that because we're moving pretty slow. I think the British pound started moving up, but you have this ATR right up above you. And they may break through this ATR, but with the stochastics being overextended, it'll still come back down and give you a new entry point. So, and this stochastics is really fast. I haven't used the smoothing algorithm on it. I actually have it open. If you're posting stuff that's sexually explicit, you'll be deleted. I mean, that's just retarded. Okay? not sure if it's robots or just people being retarded. We have some of those in the world. Now on the binary, remember there was two prices that were available on the binaries. One was 42 and one was 38. You need to start watching this because you've got about 40 minutes left on that binary, and you really need this to move down. Currently you're about break even on that, so now this morning, if you're looking at the yen pairs, it's not just the USDJPY. You also have the British pound yen, the euro yen, and the Aussie yen. The Aussie yen is moving down. British pound yen is not, and the euro yen is moving down. The others are not. So, in fact, the British pound yen actually did a 50% retracement and is moving back up to the ATR. It may test the ATR and then go down, but generally the 50% retracement is a good area to actually buy a binary on. Or sell. I shouldn't just say buy, depending on which direction it is. Not sure. Let's see if I can add it to this one. To me, the Fibonacci levels, they're actually pretty good to put on the chart, because you can see when they do the 50% retracements. And usually if it comes back, this is the 50% retracement. And if it comes back to here, it's a pretty good, if it closes down, it's a pretty good indication that it's going to go down. In this case, it went to the 38.2. And then this is the 23.6, I believe it is. I really like having them on the chart because, for example, this was a really good entry point because it had tested it and came back down. Tested it again here, but is it going to hold is the question right now. And I do generally keep them on my 15-minute chart, just to let me know where the retracements are as far as Fibonacci's go. The one thing you don't want to do is use this as a stop area at 109.50, because it can actually come back and test this area or the ATR. So if you're using that on the Forex market, you're too close. I would venture to say 70 would have been a better area to put your stop. But, you know, again, as long as I'm above this red dot, I'm usually okay. And if not, then I actually do want to be wrong and just get out of the market. If you like price patterns, there's a small pennant developing over here on the 15-minute chart. I don't trade the pennants as much as I trade other price patterns like double tops and bottoms. But here's your pennant, okay? If you like trading them. It's a very small one, but I would still expect them to come back and take out this bottom line. Now, I'm not worried about the touch bracket because the touch bracket doesn't expire until Friday. But this is, you know, the 2-hour binary, the 2-hour call spread. You don't have as much time on them. And this is really where it's going to come down to what this value is in the next 32 minutes. And actually, on this one, I could put the value of those binaries. Can't put them over here, but I can over here. One was 42. So normally I put it under that value. The other one was 38. And you want to make sure that you come under that number. And I'll change this to let us know that it was a binary. We'll just do purple. And this one, it just depends. This one had about $40, or no, it was 38. This one had 25. At one point, you could have got that for 22. The only thing that you're missing on that one is, you know, the market's not moving. And that's your issue. In order to really make money on the binaries, you need some movement. Unless you're using, you know, at the money or deep in the money. You know, you could have done, for example, 46. Okay. Right now, the risk on that's about $75. So, to me, it doesn't make sense to do those because your risk to reward is skewed against you. And I like to skew it in favor of what I'm doing. So, it just depends on how you want to trade. There are so many options in today's markets. When I first came into trading, we didn't have so many options. You either went with the spot Forex market or you went to futures. When I first started trading Forex, they didn't even have futures. Now they do. That started later. And I used to trade them a lot because you don't have that pip spread as your cost of trade. So it was pretty cool. You could trade it for the same, depending on what the commissions were with your broker. Now we have a lot of opportunities. And one of the things, you know, if you see the market is moving really good, you can actually take advantage using all 4 techniques like I'm showing you this morning. Whereas days where the market's moving slower, you might say, I'm going to use a touch bracket instead. Just depends on how much you're willing to put into the market. How big is your account size? I have done it all 4 ways. Trading the spot market right now, I don't like as much. We don't have as many brokers, so you don't have a lot of competition, which means really things are skewed in their favor. Just my opinion, of course. Everybody has one. On the first binary option, which was 109.42, you have made just about 20 bucks on that one. But remember, you were risking 38. On the other one, the 109.38, it has about 28 minutes to get down there. And again, I'm not seeing a lot of volatility, so I'm not too sure you'll get there. Let's go over and look at what the British pound dollar is doing. I want to make sure it closes above this ATR before I even think about entering this. It's Tuesday morning. There's no reason to rush on an entry, in my opinion, of course. I like to see how the market is going to start moving. And we may have some slow movement this week because we do have the yen announcement and the euro announcement. So these are just sort of like testing the waters. Now you can see it's not a big movement that you need for this binary down here. This one currently is trading at 41.40. Well, you need it to come down here to the actual binary is at 38. Now, I always set it below that because, for example, right now you're trading at 109.44 and the binary is at 109.47. Okay, so I like to put it below where that binary is. Okay. That's up to you as to where you put that. on the 109.42, you have made right about $30. On this one, you have already made 25. So this is a 1-to-1. This is less than a 1-to-1. That's the difference between your binary options. I would like to see this close below this blue line right here. It's right at 37.9. And that's only because you don't want to see it reject that area. You want to see it continue down. If it forms a double bottom in that area, then of course it's going to pop up. You don't want it to do that, especially on that binary. I would really like it to see it come down to the 109.32 area. I just don't think we'll have the volatility to do that this morning. And you have about 19 minutes in your binaries and your call spread. Remember, the touch brackets don't expire until Friday. This is what allows you to take advantage of a potential move. Even if it's moving slow, you could actually use the touch brackets. That's the advantage, in my opinion, of using the touch brackets. I know a lot of people are like, bah, it's if touched. Well, yeah, that's the way trading normally is. I guess we got them spoiled to the binaries. In this area, you can see they rejected it last time, so that's going to be an important area. Does it hold or not? If it does hold, where's the next area? Well, it would be over here at 109.07. And then the next area is down here at 108.68. So to me, the touch bracket is the better option on these. And you see how far I am from this high here? I like to see a good distance off of that, especially with the touch brackets, because you're going to be in the touch brackets typically longer than you're in the binaries. You actually need the binary, the one that's at 109.38. Price needs to move 1.6 pips down. Currently it's 109.396 is the indicative price. So you need it to move down 1.6, but now it does have 15 minutes to do it. I just don't like seeing that rejection there. I'm wishing it would come in stronger there, because you've only got about 41 seconds. A lot can change in 17 seconds. It can go from a bullish to a bearish, or bearish to a bullish. This is your last 15-minute bar on the binary options and the call spreads. Again, the touch brackets don't expire until Friday at 3 p.m. You have a long time on them. And currently, price needs to move down 2 pips for the 109.38 binary. If it moves above 109.42, in other words, it would have to be 109.421 to actually result in a loss on the first out of the money binary, which was 109.42. On the touch bracket, you're about break even right now. And remember, when you're short on a binary option, it can be equal to that number. So, for example, that first purple line highlights the first out of the money binary option that was available at 109.42. So if price is equal to 109.42, you would still make the full payout. But if not, then you would lose what you paid on entry. That did go down to a 1-to-1 risk to reward ratio. It went a little bit higher because you were risking 38 and there was a $40 profit on that at one time. And as it stands, the call spread, you're actually going to lose the $3 that you paid on entry from the looks of it right now. It's coming back up to that 109.42 area. And this is why I tell you I set those targets, because sometimes it'll move in your direction and then pop right back up right before expiration. And I don't like giving my money back. It takes too long to make it. Now, on the call spread, it doesn't matter if it goes to 60. You still only lost that $3 that you paid on entry. And there's about 12 minutes, and I will stay with it the 12 minutes, and then I'll probably end the live trading. This little bitty blue line here, identified that as a potential support area. This would be what I considered a micro double bottom. I don't think it's going to go far off of that, but they are rejecting it at the moment. And that just, it may mean it comes back up here and tests the ATR again. And that's one reason, if you're trading the spot market, you have to have your stop setting off of that. Your indicative value right now is at 109.424. You have about 8 minutes for this to move down. You have about 4 minutes. Oh, no, 6 minutes, I'm sorry, before this expires on the binary side and the call side. We did a call spread to binary option choices that you had. Now, both of them did make money, okay, and I pointed that out when it did. But if you decided to wait until expiration, you're probably going to lose on this one. The call spread had a $3 risk, and I guarantee you, more than likely, you have lost that, okay? But on the touch bracket, you're still in, and you're still in on the spot Forex market. So regardless of how you decided to trade it, well, not regardless, but depending on how you decided to trade it as to, what your results were. I do suggest that you subscribe to the channel to be notified when I go live. I like to show different ways to trade the markets. I do have several trading courses available on my website at TradersHelpDesk.com. I also have trading packages for multi-charts and NinjaTrader and TradeStation, as well as quite a few books on Amazon on trading, both binary options, spreads, and using volume analysis. From a risk to reward standpoint, the best trade actually came from this one right here. That was your higher risk to reward ratio, because this one you were risking 25 and actually made right at 30 on that. So that was the better trade for the morning, with lower risk and a higher profit. This one did just a little bit over 1-to-1. And of course, the call spread, you only had $3 of risk, and it never really truly went into profit. The touch bracket does not expire until Friday at 3 p.m. But again, if price was to go up and close above this area, then I would be out of that one. So I wouldn't have the full risk. Even though I have a touch bracket up here, this is the ceiling of the touch bracket, I would not wait until it came up to here. If it closed at 70, I would probably be out. On the spot side, there's a stop at 65. So just depending on how you wanted to trade this as to what your risk level was. Okay. I do think that both of the binaries, if you held until expiration, they're going to expire out of the money, because the indicative value is at 109.46. You have 2 minutes. I just don't think it will move down below there, okay? Considering it's only moved 7 pips in the last hour, the chances of this moving, 5 pips, in the next 2 minutes is pretty slim. So again, subscribe to the channel if you'd like to be notified when I go live. I don't have a set schedule. It's just when I feel like going live, basically. Okay. Everybody have a wonderful day. Thank you for joining me. Please visit my website at www.tradershelpdesk.com and have a wonderful day.